morning, trading world. It is March 27, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. The title for today's outlook: Changing Focus and Why You Should Too. Every day I come in with the SPY being the primary focus. The reason being is that it is a great proxy for the entire market. Has the best liquidity and spreads of any product besides its counterparts, the SPX and the futures. Let's switch gears a bit, and the reason why is opportunity. Let's take a look at how the sectors break down. As a quick and dirty way to see who's most important right now, let's look at market cap. You need to understand that in order for the market to go higher and stay higher, certain sectors have to participate and or carry the market higher. With the participation of certain sectors, we can't go higher. Let's start with the financials. Highlighted right here is the XLF, which is the financial sector. It has a market cap of 22 billion and change, almost 23 billion. Now, going to the XLF, and let's go to a year to date time frame and chart, and let's look at it at a percentage. The XLF is down around 21% on a year-to-date basis. Last week we saw a bounce, but with so many headwinds to fight through, don't expect recovery in this sector anytime soon. Next, let's look at the XLY, better known as the consumer discretionary sector. The XLY has a market cap of about 15.5 billion. And let's go to the XLY. The XLY is down around 24% on a year-to-date basis. Now, with rising rate environment, a credit crunch, and the Fed shrinking the balance sheet in front of an oncoming recession, who will continue to go out and spend money on luxury and discretionary items? No one. So it's really hard to see this sector stepping up and carrying us higher. Lastly, let's look at XLV, the healthcare sector. It has a market cap of just over 19 billion. Let's go to the XLV. Now, healthcare which is down just 7% on a year-to-date basis, this sector has potential to rise in the face of trouble and a recession because this is a necessity or a defensive sector. There is some bullish opportunity in the healthcare sector. One of the things being I am actually long Pfizer. That is one of my picks right now that I am long. So there are probably many other opportunities to go long in healthcare. Now, I've saved the best for last. And actually the place with the most opportunity for last. And that is going to be the XLK, or the tech sector. The tech sector has a market cap of $54 billion. That's more than double any other sector. Now, from that alone, you should be able to deduct that whatever combination of sectors we look for to go higher, that this has to be one of those sectors. Because with this huge market cap, everything else has to be positive or moving up in order for us to just tread water if tech is not moving up. Let me bring tech up to the chart. The tech sector is just 8% down on a year-to-date basis. It has fared well because most people have ran and tried to hide money in your Apples, Microsoft, Amazon, Google, and others. But ask yourself this question. How long do you think tech can continue to do well facing a credit crunch, a recession where most people and businesses cut spending on goods and advertising? And before you answer that, let's look at a disturbing fact. Let's take a look at Google. And let's see where Google actually makes the bulk of its money. As you can see right here, 70% of Google profits come from advertising. And if that isn't enough, everyone loves Apple. %42 of Apple's profits come from sales of the iPhone. Now, consumer discretionary was down 24% on a year-to-date basis, which is showing that people are already putting a limit to what they are spending. And going into a recession, that tends to contract even more as far as advertising dollars, spending on things you don't need. A lot of people will start to think about, I'm going to hold this iPhone a little longer. I'm not going to get the upgrade right now. Those things really show facing a recession. So back to that question, how long do you think the tech sector can continue to fare well and hold us up in the face of all these oncoming headwinds? In my opinion, the days are numbered on tech. And when tech falls, so does the rest of the market. So from here, I will be paying close attention to tech and individual companies in this sector looking for short opportunities. I have already taken positions in Microsoft, and I was able to take profit on half of that position just last week. Apple is in my sight next for a long-term position short. That being said, let's get back, and since this is the beginning of the week, let me give the outlook for the week on the SPY. The outlook for the week on the SPY is bullish, with a retracement possibility of above 396. We have somewhat of a dissonance between the tech side, which is right about 50-50 right now, and the quant side, which is bullish. This brings me to the key levels of the day. Give me just a moment while I set those up. And here we are back with the key levels of the day. Starting on our support side, we have our Jack support at 397 to the 396 area. Queen support 395 to the 394 area. And King support 392 to the 391 area. On the resistance side, we have our Jack resistance at 398 to the 399 area. Queen resistance 400 to the 401 area. And then King resistance 402 to the 404 area. The main thesis for today is bullish, closing above the 395.75 with a projected target high of between 396 and 404. The alternate thesis is bearish, closing below the 395.75 with a projected target low of between 395 and 391. The main channel we are in is from 397 down to 379. The main channel above is 397 all the way up to 416. Now, last week, market strength and breadth opened at a low and bounced from there all of Friday. I expect strength to open maybe a little stronger, and depending on how strong we open, we could get pinned and become either trend day or rounded reversal day type. We have dissonance between the technical side, which is bearish, and the quant side, which is bullish. The futures, let me take a look at the futures real quick. Alright, the futures have a bullish bias for the day, with dissonance between the technical side, which is bearish, and the quant side, which is bullish. This brings us to the scenarios of the day. Alright, our first scenario, and most probable, even though it's not by much this morning, is going to be our trend day up. Meaning we could open gap up, start with a push back toward the previous close, represented by the blue line here. Find support on or before that previous close, then begin the uptrend of the day. We usually find midday chop around either the possible queen or king resistance area. And not all the time, but a lot of the times we do have a scenario that plays out in the second part of the day where it starts out looking like we want to continue the primary trend of the morning, which would be up, but it usually turns into a head fake and we usually get a fade into the close. That is our trend day up day type structure. All right, our next scenario, and I have to say what's interesting for today, it's going to be these last two scenarios because they both have just as much a chance of happening. So the first one that I'll introduce is going to be the rounded reversal day type structure. We could get a continued push lower toward the jack or queen support area, find midday chop around either that queen or king support before going back up with the same energy or force we went down with the first part of the day. And I know I said, queen or king, but with the rounded reversal day type structure, it would mean we would have to stick above the queen support area. So this is our rounded reversal day type structure. It is also probably good to be on alert for the vice versa on this rounded reversal day type structure. And the vice versa would be something like this, where we get this continued push up in the morning, find our midday chop somewhere near the queen resistance area. That's where we would have our midday chop. And then the second half of the day, we will probably come down with the same amount of force or energy as we went up with the first part of the day. That is our vice versa alert. All right, our last scenario is our expanded range day structure. We could begin the day with a possible series of fades and pops that take us back toward the queen support before building back up toward the highs of pre-market. This is our expanded range day structure. These are the three scenarios that I will be planning for today. You have to be on alert because we're nearing the top or important area of resistance on a larger time frame, being the weekly. And if we pop through that resistance, we could have a big day at some point. I don't see it happening today, but this would be something to keep your eyes open for on one of the primary expiration days later in the week, be it Wednesday or Friday. So that's something you want to consider, keep your mind on. As always, your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have on in each position and managing that risk in accordance to our account size. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.